I'm Todd Benjamin. Welcome to this live broadcast with the International Bar Association from London. It's my great pleasure today to be with James Palmer. He is the senior partner and chair of the Global LLP Council at Herbert Smith Freehills. He is one of the UK's most highly regarded corporate lawyers and has tremendous experience, almost 30 years with the same firm. James, let me start off by asking you, because you have this breadth of experience, almost 3 decades, as I mentioned. What do you see as the big challenges for law firms, and has it changed radically from when you were a trainee?
Right. I think that there are always lots of big challenges for law firms, and I think there are specific ones now. And has it changed radically from when I was a trainee? Yes, and we can come back to that. In what ways? I think that the big challenges for law firms at the moment are really about making sure they think about what is the service their clients want, not just the service they've always provided, and whether they are changing it to align themselves with what their clients want and delivering the service in the way their clients want, which is a bit different. So we're seeing alternative structures for delivery. We're seeing all sorts of different arrangements for partnering of service delivery, disaggregation of service and so on, but also internationalization of service. So I think that's a big challenge. I think there's a challenge generally of the supply of lawyers compared to the demand for lawyers. We've seen a huge shift to the build-up of major in-house functions, and they do a fantastic job, and they are changing the nature of the role of private practice firms such as my own. I think one of the other issues which probably is less talked about, and probably the profession wants to try and demonstrate is not an issue, but I actually think there is a latent challenge there, is all law firms are smart commercial organizations, but we are part of a profession. Being a profession, maintaining values, integrity, service focus to clients are part of the discipline and the requirement and the sort of the rules of the license of being a profession, the privilege of being a profession. And I think as organizations become more and more commercial, there is an important challenge for them in not losing sight of what gives them their justification to exist as a profession, that badge of a profession, which is very important and valuable both to their feelings of satisfaction in what they do, but also to their role as a service business. Because I think corporatization and going with scale can cause people to lose sight of those issues if they're not very focused on sustaining them.
Obviously, you've given this a lot of thought. Now, you took the role as senior partner in February, and you have responsibility for the firm's strategy. Given all you've said, what are your immediate priorities?
Well, the responsibility for the strategies for our council, which is our equivalent of a board as a whole, which I chair, and it's firmly with our CEOs as well. But it's my responsibility to guide the board's consideration of it. The immediate priorities are, we have had a period where our immediate priority has been integration of the merger between Herbert Smith and Freehills, and that's now done. I mean, we're really through that. So the immediate priorities are particularly to focus on the client service issue, actually. I mean, most people talk about strategy as international expansion, new offices, new markets, and so on. But for us, the overriding focus at the moment is what are the services our clients want, and how do we deliver those more and more effectively, and how do we test our assumptions about how we're doing that. Of course, as part of our strategic focus priorities, we are also thinking about what markets we have to be in, how we have to be in, and how we deliver a great service to clients. We are also thinking about service delivery models. So it's well known that we opened an office in Belfast, a lower cost model to do a lot of process work around document review and so on, which was a very innovative idea that I didn't contribute to at all. Our CEO, Sonya, Leydecker, was firmly behind that initiative. And we think about things like that as well, about different business models of delivering better service.
You talk about delivering better service, something, of course, that general counsels are very concerned about, and clients in general, is, of course, what it costs them. Yes. All right, and obviously there's huge competition. Yes. And one of the issues is if you for instance, increasing client demand for quick solutions to difficult problems, right? Which is not necessarily consistent with a billable hour approach. How do you find common ground on that? Because if I'm a client and you come up with a very quick solution, which is the right solution, should you be paid less for that than something that maybe would take you, 100 hours, for instance?
Yeah, well, you're absolutely right. So when I started out, London law firm fees were controlled by the solicitor's remuneration order, which said you took account of the hours, you took account of the value to the client, the complexity of the issue, and a series of other factors, which allowed you to have a billing approach that looked at those factors. We are far more flexible in our billing approach, as indeed are most of our competitors, than probably the perception is. And I think the billable hour was not something created by the law firms. It was created actually a number of years ago by the clients looking to have a measurable. Everybody looks for metrics and measurables to judge performance, an output that exists are the billable hours, and there was a focus built on those for charging. I completely agree with the implication in your question, which is it's absurd that you give some incredibly valuable advice very succinctly using 30 years of experience or 20 years or whatever it is from whoever's providing, whereas you do some rather mundane, straightforward process which takes 100 hours and you make more money out of it. I think that the billable hours model, to the extent clients want to use it, which of course many of them still do, works provided that there is a relationship and you understand that it's a package. And they can't just come to you for 5 minutes twice a year to save them some staggering amount of money. You expect to have a relationship where you will work with them in other areas, and the relationship doesn't work if you're only doing 5 minutes work, saving them staggering amounts of money. And I think most clients get that. I think that we have always been open to alternative billing models. It's not a new thing. Everyone talks about it more now, but we've always done it because that was actually the UK regulatory model, was that you were required to think about these other factors. So we have clients who want fixed fees, and as long as you've had a sensible scope of assumptions and so on, we'll do that. We have clients who want different weightings on different issues, and again, that's fine. My view is I frankly don't really care how we make a return from a client as long as it's a fair return for the work we do, and that's the conversation I expect to have with the general counsel of our clients.
How do you judge what's fair?
Well, we have to measure the value of our inputs to them, but we have to look at the efficiency with which we provide those as well. And I think looking at our efficiency is something that we're very focused on. Are the ways in which we have always delivered our service actually as efficient as we think they are? Just because we've always done them doesn't make them efficient. And I think that a lot of our clients have thought about the structure of roles, what actually the priorities, what actually an expensive outside counsel should do as opposed to somebody else. And I think it requires judgment. There's not a science on it, and it requires a conversation with the client. And I think you have to, by definition, you can't do work for a client without a relationship which allows you to have that discussion and an agreement and an understanding, and we tend not to fall out over it.
You like to think of your firm as being very innovative and sometimes leading as opposed to following. You have a very different governance structure, and it sets it apart from other law firms. You have a senior partner, that's you. You mentioned a CEO. In fact, you have 2 chief executives. And of course, you have the Global LLP Council. What do you see as the advantages of this model over other models? And before you answer, I just want to encourage all of those who are listening. James is very happy to answer any of your questions, so please submit them at any time.
Yeah. Well, I think I'm not going to say what's the right model for every organization, but our model, so we don't aspire to be like a big company just for the sake of being like a company. But obviously the structure we've got, where you have an executive management led by CEOs and an executive committee with a council equivalent of a board with a chairman, which provides governance oversight, is a little bit like what you see in a well-run big multinational corporation. I think that the advantage of it is it allows you to have dedicated management who, with 2,700, 2,800 lawyers around the world, understand the business, get engaged in the issues, understand what's going on around it at a much more granular level, but to make sure you've got a body that stands back, thinks long-term, thinks strategically, thinks about culture, values, integrity, all the things the executive team think about too, but is just providing a dialogue and a forum for a dialogue between the two. So we don't have, complete powers vested in one or the other, but it creates a structure for oversight and debate and thought.
Could a non-lawyer do the CEO's role within a lawyer's firm?
I mean, in terms of skills, yes. In terms of where the law firm acceptance of the skill set is, I think is much more of an open question. I mean, in our firm, both of our CEOs are partners who were highly successful practicing partners. Both of them have spent most of their time, yes, they spent a lot of time with clients, but both of them spent most of their time as managers and have become very expert managers by any corporation, any organization's measure.
Also, of course, you were a very strong advocate of the merger with Freehills, which is an Australian-based firm. A lot of firms have merged. Others are considering mergers because of globalization, technology, all sorts of criteria. What did you learn from that merger? And were there certain assumptions about mergers that didn't hold up once you were involved in that process?
I think we don't always get everything right, but I think the merger between Herbert Smith and Freehills, we can hand on heart say we did get right, and we did actually. So we didn't rush into it. We spent a lot of time between the two firms, and the two firms had worked together for nearly a decade, so we knew each other. And we spent a lot of time thinking very carefully about what we were doing before we went into it. So I am absolutely clear. So I think what we learned from it was that many of the assumptions we'd made were right. The best thing we learned from it was that all of the debate we had about client response to merger relative to the risks of merger, because there are risks, any big change like that brings risks, because those who were driving it, particularly led by Gavin Bell, the then CEO at Freehills, and David Willis, the CEO at Herbert Smith, had identified the right characteristics for merger, which were, would it help our clients as the first driver? Secondly, putting groups of people together, would those people align and build a shared vision and build a unified firm rather than operating as distinct organizations? And we tailored what we did in how we implemented the merger to try and address the drivers that we wanted, which was to build an integrated firm for the long term, irreversible, aligned around common goals, not fragmented. So what we weren't interested in doing is having two different regions with a badge of integration. So if anyone who comes into our firm, wherever they are, everybody they engage with feels it's one firm. There's nobody who talks about one or other old firm. And I think that was because we had certain goals of integration. But I think that the best thing we learned, as I said, was the client reaction, which was even better than we expected. So I remember standing up before the Herbert Smith partners, advocating it and saying, look, I really think clients are going to like this because our core client base are big global multinationals, and they want an integrated service where it is of the right quality, where it is aligned, where it's interested in them. And the client revenue reaction, the client response was just way beyond even what we'd projected. So we'd set some stretch illustrative targets for revenue increase in the first year. We went through that in something like 7 months, which we hadn't expected.
Of course, you are a much larger firm as a result of the merger now. One of the things you constantly have to think about is, how do you sustain the firm? And one way you sustain the firm in the coming years, of course, is to make sure you hire the right people. Do you think that young people who are entering your firm now are very different from the type of trainees that were entering it back in 1986 when you were basically just a very young barrister? And if so, how is it different? And there's also a question, an ancillary question to this from Joyce Tan of Joyce Tan and Partners. How do you motivate young lawyers?
Well, motivation, I could talk for too long about, but so that's a great question. So in terms of, is it different for young lawyers? Yes. Is it completely different? No, and I'm determined it shouldn't be completely different. I think that there is so one of the differences is we're bigger, and as are our competitors. So we have more processes around recruitment. And one of the things I'm interested in, and I'm actually talking to our recruitment partners globally about, and our council will talk about later this year, because I think it is such a fundamental issue, because we are a people business, and I care deeply about what our quality of people is in 20 years' time after I've retired. And we need to get the right decisions now for that to work in 20 years' time. So I think that I think in this jurisdiction, students work harder now than they did 30 years ago. I think they have more requirements to get through screenings to check boxes. What experience have you got? Can you demonstrate commercial interest? And I do have a concern that we're screening out people who don't conform to some checklists. I'm not talking about diversity, I'm not talking about background, I'm talking about those who are able to demonstrate certain attributes that they know will use their evidence to outperform an interview or in the recruitment pre-screening processes those who may not have done those things but may have even better potential. So I'm very interested in potential as against built CV. So I think there's a question about, have we got all the right people coming through? Have we got enough people who are a little bit more left field coming through? And I know other organizations worry about that as well. When they start work, I think that the biggest difference is the teams that they work with now are so much bigger than when I started. So when I started, I was always the only associate on everything I ever worked on. As a trainee, article clerk, I'd be sent into meetings on my own, and that doesn't happen as much. And I think we need to tie in with Joyce's question, to motivate people, we need to give them responsibility and fulfillment. And I think we need to look at whether we're doing that enough in our firm, in our industry, because if we want to train up great lawyers and motivate them for the future, they need to achieve fulfillment in what they do.
Of course, many of them will aspire to be partners. Do you think the partnership model is fit for a purpose? I know that you've gone to a slightly different model. Yeah.
Well, we've changed our model in terms of some of our remuneration structures and so on, but we are still a partnership, and we're a bigger partnership, and we have a governance structure and we have management, but we spend a lot of time thinking about the characteristics of partnerships. So there are partnerships that have completely different cultures. So partnership is a label that is sometimes used as if they're all the same and they're wildly different. I think the partnership model is code for a culture where people feel a sense of personal input, a sense of personal control over what they do, a sense of teaming and collaboration, and achievement of goals and fulfillment as part of a team. And I think those parts of partnership are absolutely at our core still.
But you have a modified lockstep approach to remuneration. You know, how will this work, or how does it work?
Well, I think that having grown up in a lockstep law firm, which Herbert Smith was for years, the mantra of the lockstep law firms always was, lockstep is the only structure that drives collegiality and collaboration because it drives alignment. Our structure is still a modified lockstep. So most of our structure is around driving sharing returns amongst the partners, so we're all aligned to work together. And globally, we have a single profit pool. We do not have different profit pools to drive that global alignment. I think the modification turns on what you value in the modification. What we value in the modification is contribution to our clients and to the firm. And if you value in that not just individual financial contribution, but you also value in that contribution to others, outstanding service, collaboration, supporting others, all those things which we absolutely do, then I think you can continue to drive those behaviors.
So are you suggesting someone who worked in a collaborative spirit, but wasn't a rainmaker, could make as much as the rainmaker?
It depends on the contribution they're making through their collaborative spirit. What I can tell you is a rainmaker who is collaborative will perform better than a rainmaker who is not collaborative. That's crystal clear.
You know, we're talking about sort of the changing world of the legal firm, and there are a lot of challenges, which you set out at the beginning of this broadcast. One of the things I want to talk about now is the need for the law firm hiring and the retention policies as it relates to emerging work practices. You know, technology has made a phenomenal difference in terms of what people can or can't do, where they can or can't do it, and when they can or can't do it. You know, your thought on more flexible working patterns, first of all. And secondly, there are a lot of women who have started off as lawyers, even perhaps became partners, then decided to leave because they wanted children. And then when they want to come back, there may not always be the flexibility they need to have some sort of balance in their life.
Well,
is there room for both? You know?
I'm absolutely convinced there is, and I think there is an issue, and I think it has not been fully addressed. And I think that the profession and other high-performing organizations which provide 24/7 service need to continue to think far harder about how they provide that service. And the heart of the issue, to my mind, is a range of different things. One is about talking about it much more openly and setting goals about it, which we've tried to do. So nothing to do with me, but with my very, very strong support. We've given commitments to achieve diversity goals with proportions of women partners. We were the first international law firm to do that. And we've set ourselves some targets. We just announced yesterday we've just promoted 43% of our new partners are women, so we're very proud about that. But that's not the whole of it. I think that the biggest issue to deal with the issue you've described is about, well, there's a returner issue and how you sustain patterns of career change through bringing up a family in the example you give, or whatever else the dynamic might be. I think, first of all, I am absolutely clear that the advantage of the large law firms now compared to when I started, as I said, I was always the only lawyer on the deal or the only associate, and you were there on your own, and if you suddenly said, I'm disappearing for 2 days, that would have been much more problematic. Now we have much bigger teams, and I believe that teams are part of the answer. So most of my clients know, they know if I'm working with them on a transaction that, intensely, that I'm available most of the day to them. But the other clients who I'm not working with that day probably guess I'm working with other clients intensively. They expect to be able to speak to me that day, but they don't expect to be able to grab me at 1 day's notice and get me for the next 3 weeks exclusively. So they accept that they'll only get part of my time, and they'll get it urgently, but they'll only get part of it. And I think that that demonstrates that if I can work effectively part-time for each of those clients, why can't other people work part-time for each of those clients? And I think it is all in the teaming. Now, I think the moment you move to much more of a team mindset, with actually not having people work through the night nearly as much as historically did, but having tag teams, having people who have got the structures and organizations to collaborate, to manage team communication far better than law firms historically did. I think you can facilitate agile working. I mean, again, I spend most of my life out with clients or on the road, and I'm not sitting at my desk all day. So if I don't need to do that, why does everybody else need to do that? So we are, again, I'm probably saying something we've not announced, I don't know, but I will say it. We're doing piloting of agile working, people working from home, people working part-time, and I'm absolutely convinced that those pilots will be successful. We'll learn some things about how we do it, and we'll do more and more of that. But I think, I haven't answered the point about the returner, the person who takes time out. We have not yet got a returners program in Herbert Smith Freehills. It is something that I think we will have to think about, because I completely agree with you that there is talent that is not being harnessed, and I think we need to look at ways of capturing that and finding structures, because we're in the talent provision business.
So implicit in what you're saying is you do see commercial advantages in having a more diverse workforce and partnership.
Totally. I mean, I think we're absolutely passionate about it. I mean, the reason I joined the firm when I was interviewed in 1984, there was only one reason, which was the environment and the interview I had at Herbert Smith, as it was then, was completely different from that I had everywhere else. It was the only firm that didn't ask me where I'd been at high school, where I'd been at university, whether I had family connection with the law. There were women waiting to be interviewed as well as men. I didn't see that elsewhere in those days. And that was why I chose the firm. So we're very focused on that.
You know, we are in the age of the global law firm now. I mean, for many of the bigger firms. Is the magic circle tag, does that still carry, you think, some gravitas or relevance? And is it some label that your firm aspires to?
It's certainly not a label we aspire to. I think it's a tag that does have some market standing and perception, particularly in recruitment. I don't think it's a tag that clients really relate to I think law is a much more fragmented profession than law firms, whether us or others, would like to convey. We all want to convey that we're the only firm you could use. And the reality is the most sophisticated clients in the world are using dozens of top law firms, not just 3, 5, 7, 9, 12, whatever it is. It is intensely fragmented. There are brilliant lawyers at competitors of ours all over the place, and that's not a bad thing because that keeps us on our toes. The way I would describe our position is we have never had any doubt that we're one of the top law firms in the world in the markets that we serve. We've always done and aspired to do more of the very best work in the areas we do, whether it's disputes where we're well known as the leading firm, or in my own background of M&A, where we've always been one of the preeminent firms. And I think that our market goal is always to be at the top of the markets we're in.
What are some of the challenges that you face in working in certain emerging markets? Because obviously you were in emerging markets before you were in Asia before, and with Freehills you've really expanded your footprint there in terms of the number of people you have on the ground.
Yeah. No, you're right. I mean, one of the main drivers behind the merger with Freehills, apart from international service to clients more generally, was about Asia Pacific and becoming the leading firm in Asia Pacific, which is our very, very clear goal, certainly as a fully integrated firm. I think, and we have moved huge numbers of partners from Australia up to Asia. I think that emerging markets do bring challenges in the sense that all markets are different from other markets. There's not a complete homogeneity. We're not providing in law a product that is the same in the way that international accounting standards are the same all around the world for firms that adopt the more US GAAP in accounting. Laws are different in different countries, and of course there are common services that clients want, globalized clients, in that we try and provide a common service standard for, but the laws are different and the local dynamics are different. So one of the big challenges, not just for law firms but for our clients, is the constantly changing role of regulation and where the rules are and where the barriers are and where some of the risks are, and challenges around compliance with rules and so on in different markets. And
so local knowledge then really becomes imperative here.
Yes. You have to tailor your advice to the local market. The idea that you can go in and provide a London view when you're doing work in the Middle East or in Asia or in Africa or Latin America is going to fail. Yes.
We have a question from a law student. He's a securities law student at the University of London. He says, in my country, Zambia, securities practice is very limited because our stock exchange is not very active. Not many companies are listing. Are there any barriers that can be identified, particularly in developing countries, that lead to this situation?
Well, I think developing countries, I don't know anything about the Zambian market per se, but I think so securities markets are about our clients and other firms' clients wanting to raise capital for their businesses. And unfortunately, if you have a small market, there's probably not much capital in that market. There are not that many investors for the company to seek to tap. So I think there will always be a challenge for those markets. I think for those markets, their opportunity is invariably to provide capital, particularly from local investors, and to meet local needs using that local market knowledge as a differentiator and their understanding of the risks. I think that the other thing I would say is, and again, I'm not commenting on specific markets, but in general, one of the things with some developing markets is trust in the enforcement of the regulation in that market. If you've got securities disclosures in a market, are those disclosures going to be reliable? Are risks properly identified? Is there enough transparency for capital to invest in that market? And the more you can establish rule of law in a market, the more I think you can attract capital to it.
We were talking about securities as an example in some of these emerging markets, but can you expand on that idea just slightly in the sense of advising clients on the risk of operating in difficult emerging markets?
Yeah, I mean, the good news is most of our clients are very international and they understand the risks of operating in those markets already. And they make informed judgments all day long about risks. So if you're in the resources business and you go in very legitimately into a particular market and you start getting mining licenses and you are very, very careful that you follow scrupulously, avoiding pulls to corruption or whatever there are, which candidly we all know there are in certain markets, and you do the right thing, you still know you've got a risk that there could be a change of government in certain markets where they'll expropriate the licenses and you'll have a fight to try and get a compensation. So you've got risks that are commercial risks, you've got risks that are legal risks, and you've got risks that are risks of behaviors that are different from other markets. So if it's a corruption risk, you could have issues with the FCPA in the US or the Bribery Act in the UK. So you've got all of those. And I think all you can do is do a really good job of understanding the risks, thinking holistically. But what you can't do as a lawyer is sort of tell your client that they can't do something because there's a risk. You have to help them understand the risk, calibrate it, use local knowledge, as you alluded to earlier, to try and work out whether this is the right thing for them, whether they need to go in on the back of some a relevant trade treaty, so they've got state protections behind that, whatever it might be.
China, very challenging legal market.
Yes. Well, China's a very important legal market for us. We were very fortunate to be one of the early, very strong firms in China, so we've done very, very well there. And I get a degree of satisfaction from meeting colleagues and competitors around the world who say, oh, find it very difficult to do well in China. We have, touching wood, done very well in China. But it is a challenging market in part because it's actually quite a sophisticated market. And there are quite a lot of barriers to international firms operating in China. And that's a model the Chinese government has adopted. I'm not criticizing it. It's a political decision. And many would say that's a smart decision for China. And it does make it hard because the local work international firms can't do. The local work has to be done by a local firm, but obviously international firms often go in helping their clients there. China is also a market that is an outbound market, and that's where we've been particularly active.
You're obviously making a very big bet on the Asia-Pacific region. A lot of chips on the table that will continue to work out for you. What could go wrong? I'm not talking from an internal standpoint, but what are the risks? For instance, we're seeing China starting to slow down.
Yeah, China's slowing down, but that's the kind of slowing down that I wouldn't mind having. I mean, slowing down to 7% growth would be something that the West would crave. I mean,
but everyone makes assumptions about Asia Pacific being the future. What could go wrong?
Well, there are clearly different social and political stabilities in different markets around the world. And newer, faster-growing markets tend to have greater volatility. So I grew up in Hong Kong, so I'm very interested in that market. And if I'd been an even better student, I might have ended up doing postgraduate Chinese. I was very interested in it. So I think that I think there are social issues of markets where there's not democracy, for example, where the introduction of greater education, of greater awareness of greater capital, is driving social change, social pressures, which can create regulatory instabilities. I think that one of the really major challenges for international law firms is in 50 years' time, are the current cadre of international law firms going to be the leading players in the Asia-Pacific market, or is it going to be Asia-Pacific-led law firms? And so I think there are a series of challenges there. All you can do is think them through, make risk assessments, dig in, try and work out how to differentiate and do it better.
A law firm management question here from Mr. A. Bonner in London. Do you think senior partners of a law firm have any role to play in cybersecurity management, or is it just for the IT department of the firm to look into it? I would assume you'd think it's everyone's responsibility to kind of be vigilant about it.
Yeah, I think that's, clearly you need to be guided and led by cybersecurity experts. But the idea that you have no interest in it would be insane, I think. I mean, I think that it is a it's a social risk facing not just law firms, but everybody. It does face law firms. And I think that it is something that our team spent a lot of time thinking about. And I can tell you that on the list of risk issues that will come before our council before too long, it's high on the list and it'll get debated, and it's been the subject of a lot of focus. I'm not going to dabble as an expert in what the answers are, but as ensuring there's a focus on it is a senior partner chair requirement.
I want to talk about M&A and corporate governance, which you're deeply familiar with, but I just want to ask you one quick question, or last question, relating to your merger. Do you see any future mergers to expand the firm's international reach?
The answer is, I think that in the long term that is a real possibility, but I think, I remember in 2000, 3 or 4 of our excellent competitors all announced that they were going to do a US merger within 5 years, and none of them did. So one of the things that I thought at the time, and I feel I have continued to learn from that, is that be very careful about committing to merger strategies as opposed to controlling your own development. I think that there is a pressure in the medium to long term for consolidation in the legal profession, I think, but consolidation brings risks with it, and you need to be very, very careful that you don't do it to be seen to do a merger, but to serve your clients on a basis that will work.
What's the biggest risk?
The biggest risk is that you are trying to tie together 2 groups of people that don't have a shared vision, don't have a shared set of goals, and will not collaborate and will not provide a better service to clients in the aggregate than they did separately. And that's a real risk. And we've seen, I mean, I've done M&A in service industries, and I've seen loads of service industry mergers that have been unsuccessful.
Let's move on to M&A and corporate governance then. You were involved in the development of the UK's K review of the equity markets. How, in your view, can companies avoid the kind of short-termism the report criticized, and which many believe caused a financial crisis?
Yeah, I think this is all about human behavior and structures that drive human behavior, and ties in with the motivation question somebody asked earlier. I mean, I think that if you give people a structure and you give them goals and you tell them to go achieve financial rewards within those goals, they'll pursue them. I think that I think that the cause of the financial crisis was a lot about short-termism. I think it was more about short-term financial goals and about lack of control and inherent conflicts in structures and disintermediation. So if those who exercise control are too removed from the underlying decisions that people actually take, then I think you can have the build-up of fundamental poor business practices as we saw in the crisis. And I think that short-termism is reduced by not all short-termism, by the way, is a bad thing. If you've got an issue you have to address in the short term, you need to address it in the short term. What you've got to do is make sure you also address the long term, and you've thought about longer term challenges as well, including changes in behaviors that you drive. Sorry.
Do you think the right structures are in place now that the possibility of another financial crisis has been mitigated? You talked about the need to really be very close to what's going on the ground. It seems to me we have a lot of structure still where it's not close to being on the ground.
I'm glad you asked, have they been mitigated, as opposed to do I think we've avoided the risks. I think that they have been mitigated. If you were to ask me the question, do I think we've avoided the structures that could create another financial crisis, the truthful answer is no.
Why?
Because I think they have been mitigated. So I think increased capital, increased focus on governance structures, increased focus on effectiveness of governance structures, increased focus on effectiveness of regulation of behaviors have all been very good things. But I think we still have risk in the system. So, again, the public doesn't tend to understand what banks are. Banks are society's vehicles for leverage and risk. A bank is a risky thing. It has a very small amount of capital. It takes money in and it then lends almost all of it out again. And if it doesn't get some of that repaid when it's expected, it goes bust. And predicting what is the amount of capital that is required, okay, everybody's now got more capital required, and on most analysis, banks are heading towards overcapitalization. But it all turns on the volatility of the economic performances, and if you have really volatile performances, that capital could get stretched again. What are you going to do about it? If you insist they're fully capitalized, then you have no economic incentive to be a bank. So there's a trade-off there. I think that you have to accept a level of risk. I don't completely believe you can ever avoid too big to fail, because I think by definition banks have to accept a degree of risk ultimately of insolvency, and if they're socially, systemically fundamental to an economy, you need to create structures to sustain their social role. But I think that I don't want to sound totally pessimistic. I do think there have been some very, very fundamental changes. I think there is a lot of work still to be done on the culture of organizations to make them more long-term.
Yeah. You've stated before that, quote, disclosure does not equate to governance.
Yes.
Is there too much emphasis on disclosure? And if so, how else can companies be held to account or encouraged to improve their practices?
Yeah, I think transparency, to any argument against transparency has now been seen as a good. All transparency is good. Well, all transparency brings cost. And if you look at the costs of regulation that had been introduced up to 2007, so before the financial crisis, compared to the costs of regulation 20 years earlier, you would think that we'd have had wonderful regulation in 2007 because a lot of money was being spent on it then, whereas very little was being spent on it 20 years earlier. Yet when we had a crisis in the early 1990s around the world, the banks were properly capitalized. They weren't lending, selling inappropriate products to people. They weren't just making short-term profits. 20 years later, with a massive investment in compliance infrastructures and detailed regulation, we have a financial crisis and we have terrible behaviors. I think that tells you a lot. That doesn't mean we don't need rules, but I think the idea that you disclose everything doesn't work when there's so much disclosure that people don't know what to do with it. You need to work out, I mean, I am a fan of transparency. I'm certainly a fan of regulators having full transparency on these organizations, but that's different from requiring everything to be publicly disclosed because it just creates huge infrastructure costs, and the costs are then borne by consumers, and some of it is not justified relative to the benefits it brings. So I think governance is much more about truly thoughtful focus on risk, truly thoughtful focus on what your social role is. And I know that's sort of a cliche, but actually I think it's absolutely fundamental that everybody provides a service of some sort or other, whether it's acting as a financing principal, whether it's acting as a lawyer, whether it's an IT person, whatever it is, we have to be doing something socially useful, and then we can get a return that is fair for that. Purely arbitrary principal trading by organizations set up for other purposes, I think is questionable.
Obviously, there's still an ongoing focus on director remuneration, bankers' bonuses. We're seeing clawbacks, for instance. You know, is this a reductive way of viewing corporate governance, and what can it achieve?
Well, I think the industry is obviously very sensitive to it, and in part it wants to be seen to be receptive to change, but in part it is frustrated by the change. I think my own view is that if you allow short-term bonuses only, you will get short-term performance only. So I have a lot of sympathy with the requirement for a greater long-term focus. However, I do think that the idea that the state will dictate the perfect bonus structure for all financial organizations, which is we're heading towards, is also misconceived. And I think you need to be careful that you don't get overly prescriptive about exactly how it has to work in international markets where there will be people who will be well regulated, well run, driving proper businesses for proper services to clients, operating in a less rigid regulatory regime which doesn't impose some totally ridiculous burdens which go with the sensible burdens, and people will gravitate to those. So we're seeing more people setting up in Singapore, we're seeing more people setting up in Hong Kong. We're not seeing people exodusing at a massive rate from London at the moment or from the EU, but I think that there are tipping points where markets do move. So the bond market moved to London in the 60s and 70s because New York just over-regulated it. And I think that proportionate regulation that drives long-term good service is a good thing, but it requires judgment, not just box checking.
You've worked on a lot of very high-profile takeovers. Do you think there is a place for public interest considerations in takeover proceedings?
I think that there can be. And indeed, across Europe, there's a public interest regime. We have the antitrust regime that is part of that. And there are other elements of national security and so on which are part of it at the moment. And the French have introduced some additional criteria recently, and and various political parties have considered different positions on this. I mean, I think that the challenge with a public interest test is what do you actually mean by it? And the danger is it means that politicians can interfere with market expectations and investor expectations and indeed social expectations on a whim to go for short-term goals again. So take the Kraft takeover of Cadbury. That was seen as a sort of demonic takeover by Kraft. I should disclose I had an involvement in the transaction, supporting advisors on the Kraft side. But Kraft were looking to bring jobs to the UK. And how good a job did the UK at welcoming Kraft with the political noise that went around that? Kraft wasn't coming in looking to slash jobs in the UK. Cadbury had already announced it was going to do that. Yet if you read the press, you'd have thought that Kraft was coming in to slash the jobs that Cadbury was trying to preserve. So I think you have to be very, very careful about what are the criteria, and if you don't build certainty around whatever public interest criteria you have and a clear, stable approach to them, what will happen is you will see far fewer international developments. And the UK has been a market that has grown through dependency on its international outlook. So take Cadbury again, or take AstraZeneca, or take Shire. These are companies that grew up doing acquisitions around the rest of the world. Are we going to say they can go and do acquisitions around the rest of the world, but they can't be acquired themselves?
What do you make of the changes that followed the UK takeover regime following the Kraft takeover of Cadbury? Do you think they were necessary?
Do I think they were necessary? No. I was not a massive supporter of them, but that's a political judgment. And to give credit to the takeover panel over what they did, what they wanted to do was to make takeovers a little bit harder, and that's what they did. And there are some transactions that do not happen because the new regime in the UK makes it a little bit harder. In particular, the risk of a transaction being leaked very early and then a very tight timetable imposed means some people just don't look at takeovers of those companies. I think that that has been the main consequence of those rules, and that's ultimately a political issue. But do I think it was a good thing for the UK when the UK markets are not about British companies and British business? The UK markets are a market structure for ownership of assets all around the world. These are very, very international companies.
And staying in the UK for a moment, do you think the more recent failed bid by Pfizer for AstraZeneca, you just mentioned one of those just a moment ago, indicated the UK's takeover system remains flawed? And if so, what should be done to rectify this?
Well, I don't think it means that the UK system is flawed at all. I think, look, I'm not going to comment. I'm reasonably familiar with what happened there, and I'm not going to comment too directly on a specific example. But I think the reason that transaction didn't happen was about value. The value proposition that was left on the table was not high enough at that time to attract investors. If it had been high enough, the deal would have happened.
You're talking about you don't agree with some of the decisions that have been made recently following certain takeovers. Do you think the current governance and takeover regimes help or hinder the UK in attracting high-profile M&A deals? In other words, the changes that have happened, are they really going to stop any company from coming in here if they think that there's going to be advantages bidding for this company?
I think that occasionally they deter bids, but on the whole, certainly, I think a number of private equity bids that might have happened do not, because private equity needs longer to sort out its funding and fundraising than the UK structure can permit. I think that was what the government intended. So, that was their policy call. I don't think that, I think the system in the UK at the moment on the whole is excellent. There are some little tweaks and things that could be changed. I think it does actually help attract companies to listing in the UK, and it is an attractive regime for the benefit of the UK as an economy because it's well understood, it's very trusted, it's very effective. It is still at its core a free market regime that allows investor choice, and it does not allow entrenched boards to protect themselves from accountability to shareholders.
We're almost out of time here, but there's just a couple things I want to ask you. It's very clear you love the law. You've been at it for almost 30 years. What is it about the law that makes you so passionate?
I do love the law, and I feel, again, it sounds like a cliche, but I feel incredibly privileged to have spent my career having this degree of fun way beyond anything I ever dreamt of having. I think the law is part of our pride in our personal integrity. I do not believe the world is all about everybody being motivated by money. I think the world is about what we contribute to it. And I think the law contributes trust and integrity, and I think when it works well, it should reflect the rules that society wishes to choose to regulate itself by, or different societies. And when it does not reflect the way in which society wishes to be regulated or thinks is fair or just, then it should be changed. And I've been fortunate enough to be able at the margins to be involved in trying to do that through my career. And I think that, but I think without the law, I think trust between people doesn't work. And I think that a lot of politicians at the moment do not understand the value of law. I'm clearly biased, talking to a biased audience of IBA members, but I think the law is so fundamental to social trust, and I think a lot of politicians have lost sight of that, and they risk jumping around and tweaking with it without realizing the incredible importance. So I think that the UK courts, for example, and the trust and integrity of those judicial decisions is fundamental to the freedoms in this country and the freedoms that it provides people to enter into bargains under our law around the world. And that has been the real strength for law firms headquartered in this market expanding around the world, rather more than we all sometimes claim credit. Sometimes we like to think it was all our brilliance.
Okay, and before we go here, one last question. In the current economic climate where companies are cutting their costs on legal and other services, what would be your recommendation as a partner of how to attract new clients?
We're not interested in making money out of you for its own sake. We're interested in providing value for money and a great service to you. Let's talk about how we deliver the service you want at a price you want. And if we can compete effectively to do that well, we will be busy enough to have a very successful, exciting time.
James Palmer, Senior Partner at Herbert Smith Freehills, thank you so much for your insights today. On behalf of the International Bar Association, thank you for joining us for this live broadcast. Have a good day.